Hi everyone, hope you're all having a great weekend. So welcome to next week Forex forecast. So I'll be looking at the forecast for 30th January to 3rd of February. So before we go to the chart, let's look at the fundamentals, what we have for the next week. So as you can see, Monday and Tuesday, most of the flat days. So and Tuesday evening around Malaysia time 9:30 around that. During the New Year session, we get some news coming out, especially for CAD, GDP month on month. So, and then CB consumer confident. So these two factor will move the market for USD and CAD, and hopefully other pairs as well, like GBP CAD, Euro CAD, and we could take some advantages during this time, 9:30 after 9:30. Following that, New Zealand unemployment rate on Wednesday morning, and then evening ADP non-farm payroll, and then ISM manufacturing, JOLT opening, FOMC statement coming up during 3 a.m. Thursday morning. So Wednesday night and Thursday morning will be a crucial time, so we can see some ups and downs. So I'm expecting dollar to get stronger from Thursday onwards. And on Thursday evening, we have GBP rate statement as well. So we can get some, when I go to the chart, I'll explain to you how GBP, what we can expect for GBP. And then Euro as well. Euro got monetary statement policy and rate, main refinance rate. So they're increasing up to 0.50 basis. And then non-farm payroll on Friday. So this will be a good moment as well. So we can expect some move. So I'm expecting from Thursday to dollar to get stronger and all the way for the entire month of February. So this is what I'm looking at. So I'll show you, let's go to the chart. Let's look at the pairs and we'll start with DXY. DXY, as far as I see, DXY got. So just want to explain to you before I start how I do my analysis. So what I've learned throughout my experience, I do analysis based on wave analysis. Okay, and that combines of Elliott wave theory, Dove theory, and wave analysis. And based on that, I come up with my analysis every week. And so far, whatever I've like communicated from my past analysis, you can see that there's around a good percentage of analysis came true. And you can view it for yourself. You can check it out. So just want to give you a little bit of more information. So what you can see here is a five-way structure coming to an end. So this is like a first wave, second wave, third wave, fourth wave, and then fifth wave. And this is an ending structure. And after fifth wave, we can expect a bigger correction. So bigger correction will be a three-wave correction. And that correction will take probably dollar all the way to 110 level, and it can break the top as well one more time before it moves the market. So I'm not expecting like, I don't see higher probability for market to break the top given the fundamentals current situation. So I'm expecting a pullback, so a bigger pullback. So this is what I'm expecting for next 1-2 weeks. So I'm expecting a little more down, take the liquidity below from this level, and then push up from Thursday onward, and then give us a pullback and then push up. And this could happen during next week itself. I'm not saying no, but what I'm saying is, for me, I see this could happen probably next week and the following week. So this is something. So most likely this is my bias. So I'll be looking for my buys. Uh, like if once market break these two lows, I'll be looking for my buys. So after breaking these two lows, I'll be looking for my buys. So we can expect a good buy from this level for DXY. This is the first time I'm starting to do Euro USD, and Euro USD is pretty much like the world most traded currency pair, and I want to like start this one as well from this week onwards. And this is what I see for Euro and Euro. I see more upside for the first week of from the early part of the week, and then probably from Thursday, Euro news onward start to crash, and basically it's going to give us a bigger correction. So somewhere around 106 level, and then market to push up further after this correction. So this might take around a month time. So this is what I'm looking at for the next month. And this could extend as well. So extend in a sense, it could go break this low as well. So these are possibilities. And so basically this is what I'm looking at. And a push up to probably 109,500 level or 1.10 level and then drop. So this is something I'm expecting to happen, unfold for the next week. So next week, most likely I'll be looking for my sells. So I'm going to neglect the buy. So whenever I get a sell setup, I'm going to be looking for my sells and then correction and then sell. So this is something I'll be looking at for the next week, Euro USD. Pound dollar, I'm expecting is to give us a little bit more downside. So why downside? Market has given a good. This is sort of a candlestick. I will like be aware of whenever it gives market gives me a candlestick like that. Uh, like this is called hammer, or some people call it shooting star. And when this is upside down, so inverted hammer, so something like that. So it's just a name, but then this candle has lot of value. So what happens is if whenever market gives this candle in a daily chart, it tends to give us more downside, a little bit of downside to fill this wick, and then go right back up. So this a possibility. So for example, I can give you an example. Okay, let's go to weekly, and then okay, let's see what I'm talking about. So this is a shooting star, right? And then market went up, take everyone out, and then drop like from just say from this level or this level, from this level to this level, market drop 600 pips. So it's huge. So whenever you get a sign like that, and this week also we got, so I'm expecting anyway downside for the next week. So this is, I'm just going to show you uh, in depth how things going to unfold for pound. So during the first half of the week, probably on Tuesday, Wednesday, I'm expecting pound to get stronger. So a little bit of downside, just give like 30-40 pips down, and then push up to take the highs, probably go to 1.25 potentially, and then from that level market drop. So this time this drop will be a good corrective structure as well. So this will be an impulse down, and we can expect market to go like probably go to this like the fair value gaps, or even potentially take the lows. So these are two possibilities I'm looking at. So for early part of the week, I'll be looking for this buy and this sell as well. So if I don't get any good setup, buy setup, I'll neglect the buy setup and I'll look for my sell setup. This will be a long-term sell. So I'll be looking forward to make at least few hundred pips on this. So at least two, 2 to 300 pips wave down and then pull back and then down again. So this will be a good trade, and uh, so this might take about 2 weeks, 3 weeks time. So this is what I'm looking at. So if you are trading pound dollar, watch out for these moves. So GBPJPY, like I explained on my first video, I think on my first or second video, market is giving us a pretty much like this sort of corrective structure. And this is also like I explained on the first video, and this is something is unfolding something similar to this. So what I can see is more downside coming to break this low, and then once this down happen, and then market probably start to give us a bigger buy moves like this. So I'm expecting market to go up before it drops some more. So and this wave could go and break this low. So first half of the week, I'll be looking for my like, I mean, if I'm my most probable move for me, I'm looking at sell. So this will be a good sell. We can write this could be like uh, about 700 pips wave. So this will be a good sell. So like something like this, a bigger sell, but a little bit bigger. USD CAD for the early part of the week, I'm expecting dollar CAD to break the lows and then go down. So this is because of CAD strength. And then latter part of the week, from Thursday morning, from the FOMC statement onwards. So dollar also increasing the interest rate. So they will be increasing interest rate by 0.25%, I think. So when dollar movement the start to get stronger, the market will shoot up. So this is the probable move I'm looking at for USD CAD. So gold, this is what I'm looking at. Gold, it's almost ready to give a small correction before it shoots up. I'm not expecting a bigger correction for gold, so this could be downside at least to take these low. There are a lot of liquidity sitting down here, and then before market shoots up. So I'm expecting February first week or second week to give a little bit of down move before it shoots up. So this will be just a correction before to take the market above these highs. So I'm expecting even to touch like 1980, 1990, that levels. So just about these highs, just about these highs. So this is the analysis. So first part of the week, I'm expecting gold to go up and take the liquidity above. So as you can see, there's a good amount of liquidity sitting above here. So there's almost equal highs here. So goes up, take the liquidity, and then start to drop. And I will not be looking for my buys from this level. So I'll be just looking for my sells from this level. So I'm looking to ride this wave and this wave and this. I mean, may not be this wave. I'll be like looking to ride this wave and this wave. So guys, just want to give you something more today as well. Last forecast I mentioned about um, trading in the zone audiobook. So by Mark Douglas, what he's saying is basically there's this five fundamental truths, and these are the five fundamental truths. And I concur with this statement, and I'm a big believer in this statement, and I'm following this uh, like a mantra. So I have this printed out and it's on front of my trading desk, and I'll look at this every single day. And just want to give you this, like, have a read and make sure you understand it. And this is 100% some valuable thing to have when we are trading full time. And so basically, first one is anything can happen. So market is such, market is like it's a unknown territory. We can analyze, we can do all the thing, but then if we don't do the right risk management, then we will lose our core. The core is psychology. So like there are many experts, they say in this market, losing money is not the biggest issue. The biggest issue, losing our psychology. So we have to protect our psychology so that we can trade for very long time. So if you are in for short period to trade and then see what's happening in trade and all that, that is not, those people, they fail. Those people who look at trade as the biggest, like they're looking at trade for long term, like they are trader, and when they call themselves they are trader and they put the right work and then they become the trader. So that's the only way it can happen. So first one, anything can happen. Every moment is unique. So please don't compare your trades, yesterday trades to today trades, and today trades to tomorrow trades. Every trade is unique. So yesterday was a loss, and today trade, it may not be a loss. It can be a good win. And if today trade is win, tomorrow trade may not be a good win. It can be a loss as well. So anything can happen. So every moment is unique. Make sure to like to have these in your head all the time whenever we trade. And the third one, an edge is nothing more than an indication of a higher probability of one thing happening over another. So the third one, guys, is pretty unique for me because in the early time of my trading life, I used to struggle to understand this. Like, you know, I used to trade without stop loss my early trading life, and then like, I burned a lot of accounts. So now is totally a different ball game. So now having the risk management first, and then looking at my strategies, looking at my trade setups, and then just going for it because I know I'm looking at higher probability only. And the moment my setup appears, I'm going for it. I'm not thinking twice. And the moment I do my risk management correctly, I'm not making a huge loss. I'm taking a smallest loss as possible for my account size. Then I'm good to go. There's no point to think about it second time. So these are my mantras. I follow it. These are my rules. I follow it, and it's a great value for me. And there is a fourth one, there is a random distribution between wins and losses on any given set of variables that defines an edge. Okay. And you don't need to know what is going to happen next to produce a consistent income. So this is something like, it's like what I would suggest anyone who's trading. So even if you listen to that Trading in the Zone audiobook, what they suggest is when you have your strategy ready, when you have your uh, like trade setups ready, and then you have your risk management ready, and then you have your rules, everything is ready. You have to go for like set of trades, like say for example 20 to 30 trades. So this is how you have to like judge. I mean, create a audit your trades, how good your system is. So look at 20 to 30 trades and follow all the right rules strictly, and then see what is the outcome. So if the outcome is more than 50-60%, it's perfect. You go for it because that is what market wants. I mean, this is what the everyone in the world, the pro traders, they need. And if you think the pro traders don't have losing trades, totally mistaken, because pro traders have as much as losing trade as well. They have a lot of losing trade as well, and they do with do the winning trades just above the losing trades. So they have more wins end of the month. So what I'm trying to say is that the losses are part of the game. So you cannot neglect that. But then we need to have the edge. We need to have the right strategy, right setup, right money management rule, risk management, and everything. And then you trades can work. So this is what I'm saying. And have a rule. So one more thing, what I want to explain is have a process-based outcome. So your trading must have a process, and it's like if you try to trade uh, outcome-based like trading style, it will be difficult for you because you will be looking at the money where like money, 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 money. Actually, if you follow your process correctly, 100% correctly, the money will follow. This simple as that. So you need to get your process correct. So once you get your process correct, the money will flow. Very simple. So this is what I will say. So have that process based trading. I mean, do not go for like the outcome based trading. So the outcome is money, yes, but then if you don't have proper process, you will fail to make money. When you have the right process, you will start to make money. So with this, guys, all the best for the next week. Have a great trading week next week.